Let's start right now. If you hear me at least. Tarantula, you're there?
Yes, I'm here. I
All right.
want to wish everyone welcome. And yeah, I think that organizers put this 3 minutes earlier. It's 6 p.m. also on my clock, so doesn't matter. Yeah, hello guys.
Hello, everyone.
So,
So we're going to go through the terms a bit before we take a look at our topic. Of course, our topic is why is a trading plan crucial or important? But before we take a look at that, just some comments. First of all, that the webinar, of course, is hosted by no one less than Admiral Markets, and we'll be presenting it. Take a look at these websites to get an idea of the markup tests and great spreads that Admiral Markets has to offer. And as always, of course, just a risk disclaimer explaining that trading foreign exchange and global financial markets in general is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar and recording is for educational purposes only. All right, so first of all, I do feel a bit better, Bogdan. Thank you for asking. I still have a fever, but it is better than this morning and better than yesterday, so that's good. So that's going at least the good way. Let me say it this way. Thanks for asking. Today's goal, we're going to take a look at explain how and why a trading plan is key, and we're going to take a look at what is a trading plan, what are the advantages of a trading plan, then we'll take a look at the key elements of a trading plan, and then we'll dive into some other things, some Forex explanations as well. So we got a lot of good stuff coming our way, or your way, depends how you look at it. First of all, we're going to explain what it is.
yeah, we will talk about generally what is a trading plan. So before we start, let me give you a definition how I see the trading plan. So it's sort of my definition. A trading plan is a personalized agenda of actions which we need to respect during our trading hours. So generally, that means, and I will give you a good example. Yesterday I didn't trade, so that was my decision. Even though I may have made some pips on that jump of euro, dollar, or cable or whatever, it was a strong sell-off. But I didn't trade because I have it set. I have a rule of thumb not to trade during very volatile hours. 2 or 3 hours after the volatility ceases, it may be good to take some short-term trade, but during those hours I never trade. So that is really one of my rules of thumb, and I really respect my trading plans. So developing a trading plan is the first step to developing a trading discipline. So if you want to be a pro trader, or if you want to take seriously trading, you need to develop a trading plan. A trading plan defines your personality, your risk management, trading rules, and trading strategies. So a trading plan defines exactly what is supposed to be done, why, when, and how. It covers all of those: personality traits, personal expectation, risk management rules, trading strategies. And if you follow it, a trading plan will help limit trading mistakes and minimize your losses. There is an old saying, it goes like this, if I remember correctly: if you fail to plan, then you have already planned to fail. So having a very strong discipline is the most important characteristic of all successful traders. So I cannot describe you how important it is to have a trading plan. During this course of webinars, I think that we have taught you, basically how to trade with different indicators. We will have more webinars, of course, but we can never talk about trading plan. And the trading plan just comes, generally it comes in the right moment. So I know, and I have heard today, that many traders suffered huge losses yesterday. Some of them were margin called, some of them Some of them had some success. They made some pips, but most of them were really suffered from huge losses yesterday. Even some of my friends from Forex Factory, which I know, who I know that they are very, very good and pro traders, but they have suffered big losses. And when I say big losses, I don't think about 3 or 5%. I'm talking about 30, 40% in a single day, or better to say, in a few hours. So without a trading plan, guys, ultimately you will suffer. You will not be a pro trader. You will eventually get margin call, and you won't develop a pro personality. Trading plan is a first step of becoming a pro. So you need to develop the plan, and I will show you just what advantages there are if you really want to be a pro trader. So let's sum it up. Without a plan, you will ultimately fail. So before you start to trade seriously, you need to develop some key elements and respect it with a rock-solid discipline. I repeat it again, with a rock-solid discipline.
Absolutely. That's the key in becoming a winner, because you need to have that discipline and patience and calmness without fear and realistic expectations, and that trading plan sums it all up together basically. Absolutely. And defines, especially I think what I found very crucial in your explanation was to avoid mistakes, because at the end of the day it's not actually how many winners we make, but how many mistakes or trading losses that we can avoid that really also give the edge and the extra percentages at the end of the month. So definitely that's a trading plan not only says when you should trade, but also exactly when you shouldn't be trading, like Tarantula says, maybe for example on a day like the FOMC. So absolutely.
Well, yesterday average true range of Euro USD was 450 pips. Yeah. I cannot remember. I just cannot remember when was the last time when that range was so big and so high.
It's massive.
It's massive. So
I was speechless.
Yeah, me too. I was just watching and I really couldn't. But I need to just make some small distraction of our main thing today. I would just say that that wasn't a euro buying. It was a closing of dollar short position. So when you have such a big announcement, such as Bernanke said, he was talking about tempering quantitative easing. I won't go into details, but most of traders closed their long positions in dollar, and that was ultimately stop hunting. So closing of a long position is automatic a sell into the market. And when we are talking about Euro USD, it's buying Euro and selling dollar. So ultimately it led to stop hunting, and it led that many traders, especially of those who have short-term trading positions in the market, they suffered a huge losses. They suffered a really huge losses. So 2 years ago, one of my key rule of thumbs and key examples and key things that I do is never trade on bid rate days, never trade on FOMC, on stress test, and especially during very volatile sessions such as FOMC or minutes or when Bernanke or Draghi speaking. I really don't like to gamble. So that is crucial, and that may be a savior of one's life or one's account. If you want to be a pro, you should never ever have margin call. You are okay. It's okay if you lose. It's okay if you make up for the losses. But the key thing here is to be as long as you can in this business to survive. So if you have a trading plan, ultimately you will survive. Without it, you will fail. Just it's the matter of time. We
Yeah.
don't know when, but you will surely fail. Believe me.
Bogdan saying that the euro dollar, indeed, I think that's true. That the last 3 years, well, I haven't really checked it, but I believe you, Bogdan. I looked at the chart and couldn't see a bigger day candle in my quick view of the market. So I'm sure that it was a long time ago that we had a ATR or a daily candle of 450 pips. Absolutely. Yeah, this is basically my view of it, and a lot of things are the same as Tarantula just said, but definitely a great explanation. I just wanted to mention maybe more specifically that it's like a business plan as well. Every business needs a business plan, needs a marketing plan, a finance plan, and the same is true for us Forex traders. We have to approach the entire endeavor and the entire entrepreneurship as just that. And often enough, I think that if we don't have a trading plan or we don't have it thought over, then it's really not a business. And I think we need to treat it as a business to become successful and to remain successful, and it's very vital. All right, just any business has it. It's a must. If you would go to a bank, you need to explain what your ideas are, what your key concepts are, why would you succeed, why are you better than competition, and stuff like that. So, just the fact that we don't have to because we don't have to go to a bank doesn't mean it's not important necessarily for us. And same as any other business, our capital is our stock. So it's a bit different in the sense that a shop owner can insure his inventory and try to sell it slowly but surely. That's a bit difficult for us, but still we have to maintain our capital because that is our stock. If our capital is gone, we have no inventory, we can't sell anything, and we can shut the store basically. So, and that trading plan is firstly geared to protect that trading plan capital, and after that increase it in a steady and consistent manner as much as we can. Of course, there'll be ups and downs, but the more consistent and steady, the better, of course, and the less drawdowns, the better. So that's my take on it. Now we're going to take a look at a few advantages.
Yeah, there are a lot of advantages of having a plan. First of all, let's say that having a plan, it's much like having a map before we start to travel. So that means, and I would ask you, would you take a trip without knowing how to get, for example, where you're going? So if you plan to go on vacation, you would surely have your roadmap, you would surely have your plan for trips, for other things you do in a summer holiday. For example, if I go to Egypt, I would like to visit pyramids, I would like to go snorkeling, diving, or maybe jumping from a cliffs. So I need to have a plan. If you go in a desert, you need to have a compass, because if you don't have it, you would surely be lost. You wouldn't know where is north, where west is, where south is. So basically, trading in the Forex without a trading plan, even if you have experience in trading live in demo accounts, can be very challenging once real money is on the table. So basically, having a trading plan helps traders to treat trading Forex more like a business. It will give us always a trading direction, because a trading strategy is a part of a trading plan. As we said a couple of webinars ago, don't search for Holy Grail. It isn't the strategy why you lose the money. Market is nasty. Market can be real nasty. So it is Mr. Market and it is Mr. You. So it's your personality along with market personality. Market will be generous if you respect it, if you follow it. If you want to squeeze every single pip out of it, you would fail. You won't do that. He will become angry and he will destroy your account. So basically, you want to treat Forex as a business, right? And if you have a business plan, if you want to have a business, you need to have a business plan. Making a business plan is a necessity if you want to run a job, if you want to run a business. If you want to be a businessman, first of all, you need to run, and you need to know your trading plan. So it's called a business plan. In Forex market, business plan is Forex trading plan. So it gives us a sense also that we are running business. Very, very important thing is also, I need to say, and I think to stress, I have really to tell you how important that is. The best chances of success when trading is you need to begin to trade by planning your trades objectively, and then proceed to trade your plan as strictly and calmly as possible. I need to stress out that word, calmly. You should be cool when trading. Why? Because it helps us avoid emotions, and the worst emotions in the market are greed, fear, and hope. So greed is that you are very greedy to squeeze every single pip, and what would ultimately happen is that market will come to your target price, but you will let it run more, but eventually it will turn and it will stop you out. That is greed. Fear is not taking a position when you are 90 or 100% sure, or where not 100, but let's say 90% sure that your position will be successful. If your trading strategy says that you should enter a trade, enter it. Without a trading plan, without a trading strategy, you will be susceptible to fear, and you won't enter a position, and you would lose a potentially good trade. And the third emotion, which is very dangerous, is hope. If you enter with a big lot versus your account, that means if you're trading 2 lots on 1K account, or if you're trading 2 lots on, well, let's say 5K account, or if you're trading, if you are basically over leveraging your trade, then if the trade goes against you, you wouldn't use your stop loss, and you would pray to your God that price reverse in your direction, and that you never will do such a mistake again. And that is all based on hope. That is a irrational emotion. Greed, fear, and hope are irrational emotions. They are not rational. You shouldn't ever allow them to escalate on your personality. But the first step in avoiding emotions is, again, to have a plan. Also, I cannot stress out how important it is to be devoid of such emotions. Forex is a frenetic activity market. And, you know, guys, very, very few, if any, of successful traders trade without a plan. And I told you that it is frenetic market. And that plan helps them to make sense and order out of the apparent chaos. Accordingly, for the best chances of success when trading, remember to prepare yourself before you begin to trade by planning your trades objectively and then proceeding to trade your plan as strictly as possible. Also, market does not have any favorites, so it can be equally unforgiving to all participants. That means that one thing that many successful traders seem to have in common is a strong sense of self-confidence that cannot be readily shaken even if they make a few losing trades. Those traders who have a proven trade plan tend to survive, while those without tend to not survive. So also market will identify your goals. Your goals are directly connected to your self-confidence. Having a high degree of self-confidence in your abilities, it will give you to be more flexible as a trader, and that flexibility can be a very useful trait when dealing in that chaotic market. Traders with a higher degree of self-confidence are also more adventurous because they are willing to make mistakes so they can learn from them and turn the initial losses into future profits. So such traders cannot only often discover new ways to make money from the market, but they're also willing to take the risks necessary to do so. On the other hand, having low self-esteem and a lack of confidence in your abilities as a Forex trader can impede successful risk-taking. A low degree of confidence can ultimately lead a trader to affirm this mindset by losing money. And let's sum it up. Higher confidence levels often mean higher profitability. There was a famous trader and market wizard called Ed Seykota, and there was a saying which Ed told us, and you should all memorize that. Win or lose, everybody gets what they want out of the market. Some people seem to like to lose, so they win by losing money. Let me cite it again. Win or lose, everybody gets what they want out of the market. Some people seem to like to lose, so they win by losing money. So, guys, your trading plan will help you to avoid taking losses personally. No matter how good a trader you are, the fact remains that sometimes your Forex trades will win and sometimes you will lose. As a result, it can really help a trader to avoid taking your, for example, trading losses personally or reacting emotionally to them and doing over trades and revenge trades, since doing so can be very tiring to your mindset and be very counterproductive to your trading success and enjoyment over the long run. After all, losing money is not a personal insult. You were just wrong on the market. So losses happen to every trader. I've told you already, even to guys who have developed that mindset, the trading plan. But they respect it. They will accept the loss. They will organize their market researches and trading activities, knowing when to trade, knowing when not to trade. But although they can afford to trade a bit out of their plan, they know when to stop. They know they should never overtrade. They shouldn't make revenge trades. Then you should never try to revenge your losing trades. So you need to watch trading risks very carefully. So what does it mean? That means that having a good trading plan only comprises one part of the overall trading game and optimal trading mindset. So another key element which should be incorporated in your trading plan is knowing what to do when the going gets tough. There was an old saying when going gets tough, bard goes drinking. So you're not bards, you're not singers, you're Forex traders, so you don't go drinking. So you will usually, let's say you risk between 1 and 5% of your trading account on a given trade. So always risking the same percentage, the trader's trade size will tend to grow along with the equity in your account. So in order to effectively trade with stop losses, you should all need to examine and have a good understanding of technical indicators and other trading signals to place stop loss order accordingly. So incorporating your trading strategy and your stop losses into your trading strategy is also a plan a part of the plan. We will have a special webinar, I think maybe it's the next webinar, about using Forex indicators, and then we will give you much more examples how to trade with indicators and use stop losses. But it should be a part of your plan. So if you do that, you will maintain a more objective mindset when trading. So always organize your market research and trading activities. There are days when you should not trade, and there are days we should always try to trade. So you have anything to add, Chris?
Oh, that's great stuff. Maybe just one thing about, very good comment about revenge trading and avoiding that. And I just wanted to add maybe a good method of avoiding iffy trades or trades that don't fit in your trading plan or that seem appealing, and you just have the feeling that it's going to do that, it has to do that. You know, maybe anytime that temptation is there, the voice in the inner head is kind of giving a direction that you know isn't maybe the optimal, but still can't tempt or cannot resist the temptation. One thing, maybe practical tip to avoid taking that trade, or at least reanalyzing if it's indeed something that is worthwhile, is to consider consider this. Normally, when you take a trade, there's no one really watching over your shoulder. There's no one really analyzing and checking you. You don't have a boss, really. So one tip what you could do is really imagine a boss or someone that has authority in your mind, and having to explain why you took that trade. Let's say your trading boss. And if you have that figure in your mind, then look at the trade again and see if that fits within it. Can you explain it to that person? So that could be a good way maybe of avoiding revenge trading. I mean, could you really go to your boss and say, well, you know, I lost that trade, but I was so mad and I took a revenge trade. You know, you can't do that. I mean, you wouldn't be working at that trading firm anymore. So maybe that would be one way of getting that, helping with that emotions and with your trading plan. Otherwise, great stuff here. I have a few of my own. I think they're probably very similar, to be honest.
Yeah, but let's say again, guys, revenge trades, don't do that. Or if you want, or if you are really sure that your counter trade will yield a better result, then incorporate it into your maximum stop loss for that day. So let's say that your stop loss, I'm talking about your maximum loss for that day. Let's say that it is 3% of your overall account. If you can afford that trade only if it fits in that 3% of your trading plan. But then again, if you want to make 20 or 30% per month, you would surely need to risk 50 or 60% per month in order to get 20 and 30% per month. So does it fit my trading strategy? No, it doesn't. I can afford to lose 20 or 30% if I want to make 5 to 15% per month. It's always double that, because the market is chaotic, the market is frantic. Sometimes you need to give more than you can get, but ultimately it will make you a profitable trader. It doesn't matter if you have 2 or 3 months in succession if you lose, because eventually you will get out of that loss. You will be positive, but you will save, ultimately you will save your money. If you don't save your money, you won't have the money to work. So you will need to quit Forex trading, and you will need to find another job. That can be very stressful on your emotions. So take that into account. Try to incorporate maximum loss per trade per that day, and try to incorporate, if you want to revenge trade, try to incorporate that counter trade into that maximum loss. Don't go revenge trading if you're not ready, to suffer. You need to be ready to take a huge hit, but let's dampen that huge hit by saying, okay, I'm willing to risk only 3%. If my initial trade is 2% in a loss, I would close it, and I will make another trade trying to make up for that loss, but I will only have 1% more. So it's your plan, 3%. Whenever that comes, okay. If it doesn't come to that day, okay. You're out of the market and you will wait for another opportunity. So you need to know what your trading strategy. Don't go for Holy Grail. Try to demo the strategy, and if it's successful, go with it. Forget about all other strategies. Go with your personal strategy, and always respect your stop loss. Always. That's also trading plan. Respecting your stop losses. So, Chris, sorry if I interrupted you. I just needed to say, because it's really, I cannot how important that is. I really needed to
Absolutely.
say.
Yeah, no, that's definitely true. I think there are some great tips here that you have. For example, a maximum dollar loss, maximum percentage loss. Think of taking a trade in terms of not only your trading plan, but justifying that trade versus your boss. Maybe you can even think of about having a emotional, psychological trading plan that says that, for example, if you notice certain behavioral characteristics like emotions, that you just take a timeout of 15 to 30 minutes and you go for a walk around the block and leave the computer screen, for example. Those are things you can think of to help you with that. But definitely the daily max is a very important thing, because it takes a long time to get that money back. Great stuff there. So I hope that you can use that. There are some other advantages I was thinking of. I think we've gone through them, but I'll just sum them up. Basically indicating when you make decisions, because at any time the decision could be made. That's a bit of a problem, because when you're out of a trade, every time you're contemplating a trade, and if you're in a trade, most people, or many, are contemplating how to get out of a trade. So there's always decision time, and it's good to have an idea when to make a decision and when not to make a decision. If you take, for example, a trade on the 1 hour chart, then you don't want to zoom into the 15-minute chart maybe or the 1-minute chart to see how that trade is developing, because then basically every minute bar you could be mentally taking a decision, do I stay in or not, while nothing happened in an hour. So that would be a good indication. Gives guidance at how decisions should be made, not only when. Helps with trading psychology, right, and also measuring the performance and goals. All right, I'm going to take a look at a few things here that I think you should consider in your trading plan, or that I have in my trading plan at least, and maybe if you find it useful. I'm going to go through some of these items first by the trading strategies, then psychology, and then risk and money management, and then add some just general business strategy, business ideas for your plan, basically. So regarding this trading strategies for your trading plan, you definitely want to take a look at your trading psychology and your trading style, and if it matches the market movements. So you might be, for example, your psychology might be a very patient type of person. Then maybe the somewhat longer time frames would suit you fine. So that's just an example. You want to make sure that whatever you trade, you feel comfortable with and you're in sync with the market movement, that you have a rhythm with that, because the market makes a lot of movements. There are a lot of opportunities every day, every week. We cannot catch everything, as Tarantula already said. So we have to focus on a certain type of movement, a certain part of the movement. And whatever you focus on, you want to make sure that it's in correlation with who you are and it fits nicely with what you do. Then you want to take a look at your trading strategy. If you're going to take a look at multiple ones, or you start with one, are they interconnected? how does that relate to your time schedule? For example, if you're full-time, of course, versus part-time, big difference there. Are you looking for a more discretionary way or non-discretionary way of trading? Do you want to incorporate technical or fundamental analysis? Bill Williams even mentions a different kind of analysis, chaos analysis. I'm not sure if it's necessarily a different style of analysis, but that's what he thinks at least. So, and he's a great trader, so I mentioned it there. And then once you have all these things determined, then you slowly get, there are a lot of them are interconnected, of course, as well. But then you slowly but surely you can start building on creating a strategy portfolio, which should have then probably multiple strategies, right? Alrighty. One of the things that you could incorporate in your trading plan is, for example, what is the key advantage of this strategy? Why would it work? What is the ultimate philosophy of it? So, and check that versus your strategy. So I think that a lot of traders rather focus on data and backtesting and tools. Well, as you see, those are the very last things on my list. But what I'm talking about here is really the concept. Why would it work the next 2 years? You could backtest it a half a year and it works perfectly, and the next half year it works horribly. So maybe it's just a certain rhythm of the market that was a certain algorithm, maybe even, that works temporarily. The market changes as it does constantly, and it doesn't work anymore. So basically the more rules you have, the more likely probably it's going to be that it could work for a specific time frame, but not for a very longer time frame in general, I would say. But so think why it would work. What is the concept of your strategy? Then you want to take a look at the time frames and which ones you want to trade, of course, after that. And then you want to take a look at the tools and indicators for your decision-making process. This is mostly what we talk about and is talked about. But when building trading strategies for your trading plan, I wouldn't underestimate the process of getting to that. All right, it's often enough skipped, but you might come to surprises and realize that certain tools are not needed, certain indicators are not necessary, or you can trade more efficiently with that and that. So I would see it as a process that has this sequence. Then you can take a look at, for example, what type of environment you're looking to trade, trending, ranging. What is your opportunity? How do you classify the opportunity? Is it a pullback? Is it a breakout? Are there any elements that you consider as a filter that could hinder that trade, you taking that trade? Is there something like, okay, this is the classical setup, but if that and that happens, I'm not taking it. Filters that would block you or block the trade from developing. Once you have that, then you want to take a look at what is the exact trigger. When do you exactly say, I'm taking the trade, right? What is the exact moment of that? Because everything before that is more or less analysis in a way, or setup, and the trigger event would have to be defined as well. That could be a breakout, could be a break of a fractal, it could be a pivot point, it could be a fib, it could be a price action, candlestick, etc. Then, of course, you have the whole process of entry, stop loss, and above all, exits. I think exits, personally, I think is the most trickiest part to learn. I think that stop losses, if you've looked at our webinar on stop losses, it's not that complicated. I think it's quite straightforward in most cases. The only thing is that there is a relationship between stop loss, price entry, and time factor that could be complicated. But otherwise, if you enter and you take the nearest closest stop loss and make sure that you exit within the certain time frame of that time frame chart, then it should be okay. And then what I mean with time frame considerations at the bottom, almost at the bottom here, is the length of the trade. That's definitely something that I think not many traders look at, is my feeling at least. Not 100% sure, but I don't think that many look really at time frame considerations, how long a trade should take before it develops, and otherwise it might get iffy and you might want to exit. Or how long does it usually the trade develop? How long does it stay in an impulse? For example, you get a move up, you get a hook back. I'm drawing now lines here, and you get a continuation of that move. How long does that take, and when does it end, and how can you recognize that? And we did talk about time frame in the webinar, so if you want to know more about that, like to take a look at that webinar. It's from February, I think. And that will help you too. It's quite useful. You'll be surprised. And testing. So these are all these things are important elements that you want to consider for your trading plan regarding trading strategies. Tarantula, anything you want to add maybe?
Well, maybe I would just need to add about time frame considerations. We were talking about multiple time frame analysis and multiple time frame trading. So basically, for example, if your setup chart is 1 hour trade and you're taking a trade on a 5-minute time frame, you should always take into account that you're basically trading on 1 hour time frame. So 1 hour time frame is your setup chart and 5-minute is your trigger chart. So if the plan is on for your strategy is to trade 1 hour time frames, you just take entries on 5-minute time frame. So your target price and your stop loss is based on setup chart. It's 1 hour chart, and you use 5 minutes for a trigger entry. If your plan is to trade 4 hour time frame and you're using 15-minute time frame, then you are trading effectively 4 hour time frame, and you're just using 15 minutes to trigger the chart. So that is very important. Also, it's very important to know what time frame you trade various Forex currencies. So for example, I trade a euro dollar and the dollar and cable, sterling pound dollar. I trade it on basically on 15 minutes and 1 hour time frame. If I would trade, for example, let's say Aussie, maybe I would trade it only on 4 hour time frame, because lately there was some sort of downtrend and I need some time to catch up with the trend. I will wait for that retracement, so I will probably wait on 4 hour time frame. If I traded, let's say, Euro Yen, you know how Yen crosses behaved, I would maybe trade on 5-minute time frame, because that particular pair was very volatile, and I would surely try to exploit that volatility, because on 5-minute time frame it's a scalping, so I trade, and trigger and setup are on 5-minute time frame. Or if I trade, for example, dollar, New Zealand dollar, I occasionally put some trades. That sort of pair is well, it's not very fast moving pair. So the last couple of days, of course, dollar crosses were very volatile, but most of it they're not very don't have much of a movement. In that case, I would go for 4 hour time frame, and I would try to take, for example, an intraday, a long intraday trade, or maybe if I'm willing, I would carry my trade over the weekend. So one of your key elements should be how what the currency pair is to be traded on which time frame. So you put on in your incorporate in your trading plan which currency pair is to be traded on a particular time frame. Also, you should always need to consider carrying the trades over the weekends. If that is your style of trading, then okay, it's a part of your plan. But if you think that your mindset is not capable of thinking and be relaxed over the weekend because you have your trade, then you don't. You never do what your body thinks you should not do. So if you're sweating, if you are very nervous, then that means that something is wrong with your, not with your personality, something is wrong with your trading personality. So this is what Chris said, trend versus range versus opportunity, and filters versus trigger. So that is very important, because you need to know what time frame particular pair is behaving. So if in general the pair is having a really low ATR, then maybe you should wait for level to be hit and you should trade it on bigger time frame. If that pair is fast moving in order to avoid potential losses, then you trade it on, if you're capable, on 1 minute or 5 minute time frame. Also, it's very important. So Chris said here, entry, stop losses, and above all exits, take profits and time filter. But what if you, for example, trade news? If you want to trade NFP, I'm not talking about FOMC, because that's not standard news, that is a conference. So if you want to trade a standard news release, ADP or NFP, let's say NFP, you should define a trading strategy for NFP and what time frame you trade the strategy and how big is your potential loss. And if that incorporates into your overall loss for that day, then it's okay. If it doesn't fit into your overall loss for that day, then you don't trade the news. So price action trading is one thing, news trading is another thing. If news trading incorporates into your overall potential loss, then consider it into your plan. If news trading cannot be incorporated due to a possible 5% of a loss, then you don't trade it. So the first thing in your trading plan is how much are you willing to lose. And if you remember all of our webinars and my personal webinars, Forex trading is not how much you're willing to profit, you're going to profit, or how much profits you will earn. Forex is how much are you willing to lose, because everything you do in Forex market is based on your money. So how much are you willing to lose in order to gain? That is very important thing. So if it doesn't fit in your overall loss of an equity for that day, you don't do it. So that is why multiple time frames are important. That is why indicators are important. That is why strategies are important, and that is why trading plan overall is important. And it all should be written in a piece of paper if you're not willing to type it on your Excel or Word template, and you need to watch it close every day before you start to trade. And you need to develop into a rock solid personality to respect that. And if you respect your plan, that it means that you respect yourself. If you respect yourself, that means that you respect market. If you respect market, that will ultimately give you more profits than losses. I think that I've been clear with this. So I really needed to stress out how important it is to know what you do, guys. Without a plan, you don't
Absolutely.
know what you do. Yeah, thank you, Chris.
Absolutely. No, that's very good points, and that ties very well with our next topic. Actually, the trading psychology. We've talked about it already a few times, but it could definitely be even a separate. It depends how you want to formulate it. You could have a trading plan for trading strategies, and then a psychology plan, basically, that stipulates, for example, things we've talked about, like walking away from the computer if you've had a loss or two losses, or when you've reached a certain level of loss. That could be a soft limit. You could even implement, for example, a soft limit that you want to walk away from the computer, and a hard limit where you really stop for the whole day. And the soft limit, you would have to walk away for 30 minutes, 20 minutes. That's all up to you. So these kind of things can all be in the trading psychology plan. which will be part of your overall trading plan. So not only can you think of stuff like looking at your own characteristics, writing down your strengths and weaknesses, and of course it's highly connected to what kind of strategies you want to trade and can trade. We've already discussed that. And how does that match with the market, basically? Where is that synergy? All right, we've talked about that. You want to also consider your level of experience and how you measure your emotions when you're going trading. When you're trading, look at yourself from a third-person view as if you're the second person outside of yourself, and look at yourself and see how you're responding to the market. What are you feeling? And write that down. That could be also very good to have a trading psychology logbook that monitors that, and write down goals if you feel that you want to improve on certain elements. And then monitor that if you're reaching those goals. All right, so that's maybe one way of helping you improve that part. And a trading psychology plan will help you with those goals. Okay, the risk and money management, that could be a different separate section as well. Very important, because basically it's the fundament of the whole trading company or trading firm or house. Without risk and money management, we have no foundation, and anything what we've done before regarding trading strategy and trading psychology could fall like a house of cards when you don't have that. Because if you don't have that in place, you could lose all your capital, and as we've stressed now, that could be the finish of the trading career. So definitely very important, very vital to protect your capital, and that's mainly done through that risk management. Now, money management is important too, in my opinion, especially to become profitable. I think once you have risk management in place, the likelihood of totally erasing your capital should be very, 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 very small. Of course, you can still have losses, small losses, and that could eat away a bit of your capital. Now, or you can be a break-even trader, right? But the money management is key in, for example, making yourself from break-even to a winning trader, because that will make sure that when you're profitable, you win more than when you lose. And that's definitely key for becoming a winning trader, a profitable trader. Because if you don't have that in place, they could be perfectly imbalanced, and it's not worth the risk to trade in Forex in that case, if we're not making anything. So let's see, I still have one more slide here regarding, so that's the trading plan elements, like trading strategies, trading psychology, and the risk and money management plan. Then there's some other things that just in general I wanted to mention that are not necessarily maybe connected to the trading strategies, psychology, or risk. The goals, very important to have smart goals, specific, measurable, achievable, realistic, timely goals. And it doesn't have to be necessarily only regarding your profits. You could have goals for anything, for your psychology, for your knowledge, certain webinars you want to visit, certain trading seminars you want to do. Maybe you want to write a book. Maybe you want to attend or give webinars or learn and read a certain amount of books per time. All this or you want to be interactive with other traders. All this could be goals for expanding your network, but your knowledge as well. Then what kind of vision do you have as a trader? Why is trading important for you? What can it do to your life? What is the vision you want to do with it? And how does that motivate you? What is your motivation? So these are not really things connected to trading plan, but maybe more like a business plan, right? In a business, every business has a vision and goals and what else? Vision and I forgot the other one. I don't know, it doesn't matter. Things that you also want to consider about is evaluation, a time path for your business. At what point do you want to be where profitable? At what point do you want that much capital? At what point would you want to maybe search for investors, for example, if you would want to? Would you want to do that? those things. Would you want to make investments in software, in a programmer, or in indicators, or in knowledge, or in more trading capital? Those kind of things. Those are all could also be in the business plan as well. So that's what I wanted to mention. Anything you want to add, maybe, Tarantula?
Well, basically, you mentioned everything that I also think and I also know, and I think that people who are listening to us today have learned a lot of valuable information about themselves. So, guys, after we finish this webinar, you should ask yourself: are you ready to trade? Are you ready to trade professionally, or you want to trade just because of you have maybe a lot of money and you want to trade for pure amusement? If you want to trade with pure amusement, then, well, you're not being very professional. You're basically a gambler and a sort of I know those type of people who are very nervous when they lose and who are ready to sell even their house in order to gamble. But if you if you belong in that serious group of traders, then you will after this webinar you will start making a trading plan. And tomorrow or on Monday, when trading session starts, you will do a new sort of business. You will do a business with your trading plan, with your business plan. So that means, and also that means in your head that you are becoming a very serious businessman, a trader, and maybe you will develop into a full-time trader over time. So be honest to yourselves and ask yourself. No, this is another slide.
Oh, sorry.
That is a slide that was for past my personal webinar. So you need to ask yourselves: are you ready to become a pro trader? Do you have, as Chris said, a vision as a trader? Do you want to learn? Because trading is a constant learning. Do you have a motivation to be a trader, as Chris said? Are you motivated to be a trader? Well, maybe if you are a losing trader, then this sort of this thing that we are showing you today, a trading plan, will reverse your trading success or failure. Maybe that will reverse your trading to a positive. So if you have been, for example, up to now a losing trader, developing a trading plan would probably give you more profitable trades and you would become a profitable trader. I think that you should give it a go. I know that many of you don't have a plan and have never had any plan before, but try it. Sorry, it means I speak the truth. In Serbia we say it's the truth. So when we sneeze. So guys, believe me, try and always trade with a plan. You need to know what you're doing. If you don't know what you're doing, you're wasting your time here. At least after a few, 3, 4, or 6 months of reading your plan constantly, you wouldn't have to read your plan each day. It will become a sort of routine, and you will know what to do just by getting up and going to your trading station out of your bed. It will be rise and shine, and then when you're making preparations for a trading session, you will have in your head, you will know what to do. You will know what your risk is. That will save you on Forex market. That will save your nerves, your health, your money, and maybe your family.
Absolutely, very important.
I think that we are really stressed out how important is to have a trading strategy and trading plan.
Absolutely.
So basically, it's a trading strategy incorporated in a trading plan. You know, Chris, many people are asking me, why don't I go with the bigger lot size, and why don't I trade with you know, much more risk? And but you know, I don't want to step away from my trading plan. If I lose from time to time, well, I will build up slowly. And if I have, example, a 10% of loss, and I go from 10 to minus 5%, then my plan is to maybe have a little bit of injection, and then I can trade a bit more risky. But if my overall loss is 15 or 10% in my trading plan, I would go slowly. I wouldn't risk too much. So that is the answer to questions, why don't I trade a little bit riskier? That is the pure answer, survival, and I do this full time. I don't have the time and nerves to gamble, especially when I trade with other traders' money, and when I trade professionally for a hedge fund. I really, that is not in my personality to gamble. If I lose, maybe the time to make up for the losses is a little bit longer, but I won't risk much, because I won't lose much. And that is, guys, that is also incorporated in my trading plan. So you need to be patient. You need to be patient and follow it thoroughly.
Absolutely.
I think
Patience
that this is also
discipline.
very, very important, patience.
Yeah, very key indeed. Because I think a lot of people get just impatient with the market development and think, okay, I've waited long enough, now I jump in, you know, and
then they lose.
Yeah, exactly. Things can take longer to set up than we realize, because when you look back at charts, you see a lot of price action in one go, in one shot. You see a big range of market data, and when you backtest maybe a certain strategy, you can see like, oh, I entered here, the target got hit here, great, it's perfect. But maybe what isn't realized is that how long a trade takes to set up, how long it takes to develop and reach the target. So in backtesting, of course, this goes all very fast and can be done in tens of minutes, right? You just quickly you scroll through the charts, not realizing maybe that all those candles are maybe like 1 hour. So that that can be a mismatch in the patience and the expectations, indeed, definitely.
Of course, and the good example of not having a trading plan was yesterday price action, when I know many people maybe have earned, but also many people have lost their money because they were short, they were shorting the price blindly while the price continues to go up. And then after the movement was finished today, if they had waited, they would have saved their money. So this is also a very big thing to know, and we already told you that to have a maximum and to determine the maximum leverage for your trading position. So that is crucial, to know what the maximum risk is, and based on your maximum risk to determine maximum position size. That is also very important.
Tarantula, you still want to go through the others, or?
No, I think that we have finished with this sort of webinar today. But I would also want to know what is our next webinar, because I think it's directly connected with this one. Now I will check it, and I think that this is something about indicators, right?
I think so.
Next one, let me check, and I will. Let's see. Yeah, how to trade using classical indicators. So we will give you a good example and good strategies of using classical indicators, and you will see how that incorporates into your trading plan in the real examples. So I already told you that using classical indicators are very important to determine your target price and stop losses. But you will also learn how to use it effectively and how you should use it according to a trading session you trade. So it's not the same, you will see, it's not the same if you're using some indicators in Asia or in London or after London close. You will see that in practical examples.
Very interesting. And do you have a webinar on Monday as well?
Yeah, I have my personal webinar on Monday, and that is trading basics, basically, pips, leverage, lot size, profit, loss. So guys, if you're not sure how to determine proper leverage for your account, come on Monday, I will explain you. So it's good for beginners and also for seasoned traders to know what kind of leverage, lot size should they trade.
So basically we have Monday, we have Tarantula with that webinar, same time, I think, and then Tuesday, Wednesday, Thursday, live trading room earlier in the day at 7:45 British time, and then of course next week we have again our webinar on indicators. Great stuff.
Yeah, very, very, very important, guys. So come and you will see some strategies, good strategies with using classical indicators. So we are not talking, we won't talk about price action candlesticks. We will talk about price action duplicates, so indicators.
Yeah,
and
exactly.
I know that many of you like to trade with indicators, so we will show you how to do that effectively.
Exactly. Looking forward.
So we
Alrighty.
have some questions. Let's see.
Yeah.
Well, Alexander says, I pour into the market the entire deposit and then the whole profit. Well, yeah, I know that, Alexander, but again, you should be aware when to trade and when not to trade, and that should be one of key elements of your trading plan. Church says, I don't take it personally, I'm just really pissed off when I prove myself to be a real loser. You should never be pissed off because, you know, you won't be such nervous when you develop a trading plan, because losses will also be incorporated in your trading strategies and plans. So it can turn you from a loser to winner. What do you think about the strategy of pyramiding? Pyramiding, if you mean compounding. Compounding is a good strategy, but in today's market conditions, it's very hard to achieve. Because, you know, 10, 15, 20 good days, and then there goes a day like yesterday, and, well, all of your compounded money goes away. So, not sure about compounding today. Yeah. Well, pyramiding is an increase in the percentage of profit many times at high risk, but also at higher income. No, I don't think if that pyramiding is a risk percentage increase. I'm not good with that. I trade with low risk. So yesterday I made 300%. Great, but you know, yesterday I told you some people made money, but also many of guys who pro trader lost money. Yesterday was pure gambling, because when we don't have technically respected trading hours, and when trading doesn't go in technical sense, there is some sort of gambling, because price could reach 225.00 yesterday, right? So technically it wasn't correct to trade during FOMC. I know that you have made money and that some people made money, but believe me, a joy of making money easily goes away if you just deeply ask yourself, well, what would have been if I was on the wrong side of the market? So I don't approve trading during FOMC and chief of Fed speaking. I really don't trade, and especially if you're trading like a professional. We don't trade, but we see the market and we decision at the moment of your opportunity. Well, you should always move the sense of fear out of yourself. So if you see a good opportunity and if you see that there are no big news releases ahead of your potential entry time, then go for it. Then go for it. I already told you 30 minutes prior to red news, I don't trade. I can close my trade during the last 30 minutes prior to big news or 15 minutes. But generally, if something happens and I'm not willing to lose, I put always a stop loss. So good tips, Chris. It saves me a lot of money. Excellent. I put stop loss only without loss and continue to increase the volume. Well, you need to have your stop loss and increase your volume according to stop loss. That means if your initial, if you're averaging, for example, one standard lot, that is maximum you should take, for example, one standard lot, and your initial position size is 0.50, you can add up another 0.50 sequentially. Next, for example, you have a short trade, next resistance is 0.20, again, trade goes in contra of your direction, you can add another 0.20 up to one full lot size, but you need to respect your stop loss. For example, today I did some good trades and some bad trades, but my last trade was longing the cable. So the cable break out of 51.05, and the cable first initially it broke 51.05 and then 51.010, and I made a trade I think at 51.10. It was a little bit high, and then the price dropped down to 51.05, and then I add some more, but my stop loss was 15 pips. So I add a position 10 pips prior to my stop loss, but it was technically valid and it was good because it went according to my maximum risk size. So you can always do that, adding into losing position, but adding just respecting your overall stop loss limit size. So it is okay. 3% is ridiculous. I don't know what you mean by 3% is ridiculous. Well, 3% a day, well, you know, I try not to risk more than that. So, well, that's my trading strategy, and that is why I have managed to survive in this Forex market over 4 years. How much pips put on period? I don't understand this. I'm enjoying this. The main thing is mindset and plan. Thank you, all Alex. Oh, a lot of questions here. Issues. Broker, what is this? Now we have all been through many stress and issues. Please touch broker, because there is also big issue.
Someone got a bonus for from the broker, and I said that the withdrawal from that money of the bonus could be tied to certain conditions. That was my answer to the question.
Yes, guys, if you go with Admiral Markets, you can have a bonus, but you need to justify your bonus. The bonus is justified if you make a certain part of lot size, and that is defined into Admiral Markets contract. So, guys, you cannot have a bonus and withdraw your bonus. That wouldn't be fair with your broker, especially Admiral Market. So you need to trade in order to withdraw afterwards. So try to consider the bonus as a bonus margin for your trades. And that is really a good asset if you know how to do that. So, well, so many questions. Chris, can you go through some of them, at least a couple of them? So
sure
we're running out of time now.
Someone's asking when we trade. Well, Tarantula if you want, especially, but for everyone who's trading intraday, the best times are the first 3 hours of the market session.
Exactly. Yeah. First 3 hours of each session. That means
which is as well, yeah, with London and New York especially. Yeah.
New York. Yeah. Yeah. First, greetings from Croatia. Thank you very much, and greetings to Croatia.
And but if you are maybe trading 1 hour charts, that could vary, or 4 hour charts, swings could vary a bit. Let's see, what is your take on? Yes, sorry.
Well, if you trade, okay, I was talking about making entries in first 3 hours and of each session. So if you make an entry in early London, well, maybe it will take some time for that trade to develop. Then you wait. But basically, that is when we trade. When do I make entry? That is basically when I start trading, and during the time I manage the entry. So I want to trade in the first 3 hours of each session, except Asia. It's good. Okay, first 3 hours of Asia are good, but it's a little bit too late for me to trade Asia.
Yeah. What is our take on discretionary versus algorithm strategies? Well, first, I think that if you have maybe a wide portfolio of algorithms that are tested long enough, and I'm talking about at least 3 years, then maybe that could be sustainable. Problem is that I think that a lot of problems are connected to the fact that not enough testing is done, but also one algorithm strategy could run into collapse or big loss streaks, just because you found maybe a certain part of the market at that time that was acting that way, and then the market changes. But if you would find a whole wide scale of algorithms and really diversify the risk over numerous ones, maybe 10 or more, then you're definitely taking less risk on each algorithm strategy. But in my opinion, I think that discretionary traders have the edge, because we can recognize patterns that are difficult to recognize for any algorithm. That's my opinion. What do you think? What do you think, Tarantula?
There is a question. Tarantula webinars also starts at the same time like today. Yes, 6 p.m. Central Time. Yes, on Monday. And I want to ask all traders who are trading professionally and all beginner traders for that webinar, because it's very, very important. Because I will explain how you should trade without taking too much stress. So stress-free trading, and that goes in accordance to pip lot size and to stop losses especially. So yeah, that's it. Then should we have a backup plan? Well, backup plan is only, for example, if the market is ranging and the market is heavily ranging, your backup plan is to switch strategies from trending strategies or counter trending strategies to ranging strategies. And then you can go with channels, but that is only for experienced traders. So that is backup plan. No many backup plans, because you need to stick to your main plan. And your main plan is your main key to success. What will be your usual stop loss in pips? I rarely go with more than 35 stop. That is usually my dead stop, 35 pip stop on 1 hour time frame. Most of us have the problem to trade the news, so we don't catch the move, and we are waiting for retracement and go in, but usually lose. Then you need to demo your strategy. If demoing your strategy isn't good, then you need to cease trading during the news. So try to trade in the first 3 hours, but especially during the first hour, because there are rarely news in the first hour of London. Or if there is news in first hour of US session, well, try to wait at least 15 minutes after the news and to plan your trade accordingly. If the day is bearish and, for example, the whole day was bearish and the news jumped, spiked the price, then try to go with the trend, sell it higher. That is again, it goes according to your trading strategy. But I always try to sell high and to buy low. So after the news, if the price goes in contra direction, try to sell it higher or buy it lower according to overall trend of the day. My opinion is that Forex and luck games is not that different. Yes, but if you apply good strategy, if you go with good money management, if you go with some sort of good price action, and if you apply a good indicator, for example MACD, into your strategy, you will raise your odds from 50-50 to 70-30. So by using a good strategy and having a trading plan, you are raising odds into your favor. So it's not 50-50, then it's 70-30, but again, it's up to your money management. It's very important, your money management. That is why we are talking about having a plan, because in your plan there should be a big part of your money management. Again, if you tell me that anyone is that patient or idiot to risk just a small amount like 3%, well, I risk very small and I'm happy with it. So guys, if you're willing to risk 30-40%, well, what should I say, in a few months or in some time you will be margin called, and unfortunately for you, you will be out of this business. Again, I really enjoy this and I'm happy to be here by Divine Light. Many thanks. Any class for advanced traders? Yes, there will be much more webinars in September because I will be out of vacation in August, but starting from September we will have good webinars for pro traders also, but also beginner traders could cope with that very good. So I think that we have managed to answer most of the questions, Chris.
Yep, sounds good to me indeed.
Okay, guys, you know the schedule. Be with us, be with Chris, be with me, and be with both of us during the next week. We will have much to talk about and really take this into consideration, as we really want you to be as long in this game as you can, and as long as you really should trade. So if you, for example, I really need to stress out this again, how this is important. Again, 3%, 5%, those kind of percentage, guys, believe me, I have gone through all of that, through all of this stuff. I have made sometimes in the beginning of my career even more than 30% per month, and then after a few months I lost everything, every profit. That was the first few hours of trading. So first few months. So guys, don't push your luck. Be professional, and we are professional traders trading for the living. So try to listen to us. We wish you very good week and see you next week, and many green pips.
Yeah, have a great weekend and great trading.
Yes. Goodbye.
Cheers.
And take care. Cheers.
The